G'day you legends and welcome back to another video. I hope you're all having a fantastic day. When is the 4-year cycle top? Will we see a later top? What exact date will it fall on? These are questions I believe everyone has been asking, and in today's video we are going to be doing our absolute best, diving through literally paragraphs and paragraphs of mathematics and data to give you not only the most likely top date, not only the average historical top date, the earliest top, the latest top, when the 4-year cycle could be reasonably assumed to be broken, and so much more. We are diving deep into the data today, but not only taking a look at that, we will of course be discussing the short term, what Bitcoin is currently doing. Are we going to see another push here into a new all-time high? We'll also be taking a look at the weekly charts, of course, and discussing the total cryptocurrency market cap and altcoin market. By the end of today's video, it is very safe to assume you're going to have a very well-rounded understanding of the macro climate, the cycle itself, the 4-year cycle, but the short term as well. So much to take a look at. Before we get into all of that, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. And if you're interested in that kind of content, the best place to be, go ahead and sign up to our Telegram channel. It is 100% free for everyone. The first link down below, getting access to our charts, our updates, our analysis, our videos, our educational posts, the list goes on. Check it out, the link down below. Let's dive on in. So a lot is happening, a very exciting time for cryptocurrency as we approach the likely end of the 4-year cycle. A lot of people are asking, when is the top going to be? And most importantly, are we actually going to see the 4-year cycle fulfill? Will it break? Will we see a later top? We're going to be answering that today based on statistics, simply giving you the raw data and what the likelihood of later tops, earlier tops, broken cycles, etc, etc. So let's dive into it, starting on the market data. Let's take a look at what is happening in the market right now over the past 24 hours, and then we'll jump into everything else. So market data, guys, 24-hour volume down 47%, 181 billion here. A bit of a reduction in volume, but of course it is totally normal on the weekend. Anytime the weekend rolls around, we see volume just literally jump out a window. It just drops down. We can see liquidations following that, 62% down, 184 million in liquidations. A lot of that actually coming from long positions, as we did see a bit of a pullback here on the short term, and a little bit of that coming from shorts, of course. 24-hour liquidation data, a lot of that actually coming from altcoins here, Ethereum and Bitcoin being actually the top 3 here, which is pretty interesting. The DXY moving sideways still, not expecting too much until we start to see some more of that data, that leading inflation data, of course, NFP, CPI, get a bit of a feel on how that data, that inflation data is developing, because the Federal Reserve made it very, very clear that they are kind of walking on thin ice. They are trying to balance stimulating the job market through dropping rates, but not doing it so much that it brings inflation back up. Because if they do it too aggressively, too quickly, inflation starts coming back up, and then they've just got a whole nother problem on their hands. So we're going to see how they develop and how they plan their narratives and strategic plans moving forward. So keep your eye on the upcoming inflation data. Of course, that is definitely a catalyst, but it is a catalyst that could literally explode or implode. It can go either way. It could cause a rally and an extended cycle, or it could be the trigger for a potential top and correction. So definitely something to pay attention to. That is it, guys. Jumping to the S&P 500. We saw that short-term daily rally here into 6,800, of course, as we told you. These psychological levels, these whole numbers, 6,700, 6,800, 6,900, these whole numbers are going to be levels where people are looking to place orders, because we have no historical price action, and psychology, based on psychology, people like whole numbers. So they look to put their sell orders around whole numbers, just before whole numbers, and that's why we saw 6,800 act as a little bit of a rejection point here. Still watching the S&P 500, it is still in an uptrend. Of course, course, we do see some early signs of exhaustion, but that exhaustion has been absorbed throughout this trend. So at most, we're seeing these short little pullbacks, followed by, of course, these higher lows printing and this continued uptrend represented by this diagonal uptrend. So provided this uptrend is able to maintain a support, the trend is still bullish. If we drop below this trend, we enter a downtrend, likely into sell side liquidity. These VRPV gaps are also levels we would be watching. So that is worst case scenario. That is something we're watching if the trend breaks. That is enough, guys. Let's jump into the analysis. Like we said, a heap to take a look at. We are starting on the 4-year cycle, starting discussing the 1064-day bar theory. We've talked about it from the perspective of the weekly chart, which gives you the 6th of October top. We are also taking a look from the perspective of daily chart, which actually gives you a 20th of October top, a slightly later top. We're then running the probabilities based on the average, the median, the median, and we're going to be taking a look at standard deviations to give you expected top date ranges, and then we're putting all that together to give you a lot more stuff. So before we get into all of that, make sure to sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll support me making this content on a daily basis for you guys, and of course, guys, you'll be trading on exchanges I use and I trust. Go ahead and check it out. We'll play the ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get stuck back into it now. Really quickly, just to tag on at the end of that ad, we do have that massive promotion going on for BitUnix. We run monthly campaigns on BitUnix. Every single trader, every single person here that uses BitUnix under my link gets automatic access to every campaign we run on a monthly basis. You essentially get access to the discounts for your trading fees, you get access to all the bonuses, and on top of just trading normally, you get access to all of these giveaways and prizes. It is money for nothing, essentially. There's no reason not to sign up. Check it out. Information in Telegram. Let's jump in. So, the 4-year cycle top. The 4-year cycle top. We're coming to the end of the cycle, supposedly. Now, I do want to start by saying there are limitations to the 4-year cycle. By no means is the 4-year cycle supposed to be predictive by nature. It's not meant to tell you exactly when the top's going to be in. It's not meant to tell you that, we've hit the top and now we're going to a 12-month downtrend. The 4-year cycle, any cycle or cycle theory by nature is diagnostic. It is deterministic. It is not probabilistic. We're going to try turn it into more of a probabilistic form today by looking at the statistics. But by nature, it is diagnostic. It's supposed to tell you what has happened and what is happening, but not necessarily what is going to happen. We can only really confirm or disprove whether or not the cycle has been valid in hindsight. So it is not probabilistic, and when we look at trading as a whole, trading is probabilistic. It is not deterministic. So I do want to make it very clear that the data we're going through today is, yes, it is completely valid, but it is just the statistical probabilities based on the diagnostic descriptions of the 4-year cycle itself. So we have to look at it with significance, but we also have to understand the limitations of this data, of course. It is not the holy grail, it is not the answer, but it is the data. And we can use that data and interpret that data based on what is happening and in the context of what is happening, which we'll explain in a second, to then increase our probabilities of being correct about moves. Let's jump into it. So here it is, guys, the history of Bitcoin's price action. To put it very simply, we've had cycles. We've had a few cycles now. We had the 2011 cycle to 2013. We can see here the average amount. We'll go zoom in a little bit over here. We saw the 2011 bottom to 2013 top. We had 1,064 days, okay? And what the 2011 2011 to 2013 top showed us was the initial average length of the 4-year cycle, the cycle itself. Now, the 1064 day bar theory can be taken from two pivot points. So it can be taken from a weekly low, or it can be taken from the daily low. Both of these slightly change how many days there are in the supposed 1064 day bar theory. But if you look at the average across a weekly and spread that across, the most average is around 1064 days. Hence the 1064 day bar theory was born. It wasn't created by me. I do not own the theory. I don't know who made it. It is just simple data in the charts. It's been talked about for over 2 years now, okay? So if we're looking at the 2015 to 2018 bottom to top, because remember 1064 day bar theory takes the bottom price after the top and then extends that how many days from the exact bottom to the exact top. That is what we're measuring. The 15 to 18 was 1062 days. The 2018 to 2021 is 1073 days. The average is around 1066.3 days, with the median number being 1064 days. And that is where we come to the 1064 day bar theory. It is the median number through the past 3 cycles, bottom to top dates in terms of the amount of days. Now, based on the 5th of November 2021 bottom, that takes us to a 6th of October top on the weekly chart. We can see over here, if we draw a vertical ray in from that bottom point over here to the top point, that takes us, if we just drag it across actually to line up, it takes us to the 6th of October top. So that is what we would consider the weekly perspective of the 1064 day bar theory. If we're looking at standard deviation, so essentially the standard amount of deviation between the average over here, which is the lowest and the highest, and when we look at the median, we're looking at around 5.86 days. So there's a variance in what is expected from the 1064 day bar theory, which could be 5.8 days more or 5.8 days less based on the weekly view. Remember, if we look at the yellow text up here, this is based on the weekly date range trend. Then if we look at the probabilities, therefore, one standard deviation range would equate to 1072 days. So we add one standard deviation range to the 6th of October, would consider a 68% probability of the top occurring before the 14th of October based on normal distribution. So based on the weekly chart, we have an expected top based on the 1064 day bar theory of the 6th of October based on the median amount of days from prior cycles, with a 68% probability of the top occurring before the 14th of October. If we take a look at historical variance, when the 4-year cycle would likely be assumed to be ended or broken, we could assume a 1080 day bar distance from bottom to top, which would be about a 2-week variance. So anything after around the 22nd of October, based on the weekly chart, so we don't see a weekly top before the 22nd of October, or we see a weekly top after on the weekly chart after the 22nd of October, we could assume, or we could reasonably assume, that 4-year cycle is broken or breaking. Moving over to the daily theory. So this 1064 bar daily theory is essentially the same thing, but what is it doing is taking a look at that daily chart. So it's measuring the exact bottom from the daily chart, which was around the 21st of November, and dragging 1064 days forward, which actually takes us to the 20th of November. So it takes us a little bit further out. So if we're looking at that data again, based on the daily chart, we can assume the median expected top date would be the 20th of October, again taken from the low around the 21st of November 2022, dragging that for 1064 days. If we're looking at the standard deviation and the mean, they're going to be the same, right? The mean is 1066 days. The standard deviation is still 5.86. So then if we're looking at the probabilities, within a 1 standard deviation range, we're looking at 1 plus or 1 negative. We have 1,058 days to 1,069 days, which takes us between the 14th to the 26th of October. If we're looking at 2 standard deviations, which would equate to a 95% probability of the top occurring based on the 4-year cycle, that would suggest a likelihood of 95% probability that the top has occurred between the 8th to the 1st of November. So based on the daily chart, we can assign very clear probabilities. There's a 68% probability the top on the daily chart will occur between the 14th to the 26th, and a 95% probability it will occur between the 8th and the 1st of November. If we're looking at that same rule, the 1080-day variance, so the breaking point for the 4-year cycle, that would be if we have not formed the top by the 5th of November, the probabilities are in favor of the 4-year cycle being broken. So that is the daily and weekly. And now, of course, by now you're probably thinking, well, Whale, those are two very different data sets, two very different numbers. So we need to smash it together and look at the average between all of that to give us the most reasonably expected. So when we're looking at the midway points here, we have standard deviations, of course, which have just been discussed. 68% probability, 6th of October to 19th of October, 95% probability, 1st of October to 25th of October. If we're looking at the average break date for the 4-year cycle, it would be safe to assume if we create a top after the 29th of October, we have broken the 4-year cycle. So that is what that is saying. If we're looking at the quick interpretation, of course, you can pause this video at any point and read all of this in detail. The most likely window for a top at 68% probability lies between the 7th to the 19th of October, based on the blended data from the daily and weekly 1064-day bar theory. That is the data there, guys. That is the answer to when the top is most likely to be in. When we're looking at what is the probability for a top occurring after the 20th of October, because remember, the 20th of October is being that maximal range, not based on standard deviation probability, but based on the 4-year cycle 1064-day bar theory daily chart from the 21st of November 2021 into the 20th of October 2025. We can see, of course, if we're looking at the probability of a top occurring after, I'm not going to read all this out for you, but the answer is around 61.7%. Now, I've also mapped this out going forward, so on a daily basis, what probability would we see of the cycle breaking being every single day past the 20th? We can see on the 20th, there's a 62% probability the cycle breaks from that point onwards, moving all the way down into the 29th of October, which is a 0% chance, meaning the cycle has broken at that point. So that is the data. You can also look at that. Now, there are plenty of reasons to why the cycle could break. We got delayed Federal Reserve interest rate cuts. Of course, we know interest rate cuts are inherently bullish for risk assets. So we move to this chart over here. We can see the flow chart to how interest rate reductions can impact debt to service ratios, available household cash flow, retail spending, acquisition of cheaper debt. We see the cycle of cheaper debt acquisition, income producing assets purchased with leveraged debt, cycle, pushing asset prices up. So we know there is a flow on effect there. So we know, number one, the main real reason why the 4-year cycle could be later or could break would be because of that. Federal Reserve delay interest rate cuts. We've got stuff like slow institutional flow, we've got global easing, we've got market maturity, we've got post-halving supply effects, we've got regulatory impacts and potentially new developing catalysts, lower volatility. There's many list of reasons of why the environment is different and why the 4-year cycle could potentially break. Let's summarize all of this for people who haven't really followed too much. We'll summarize it very simple. The most likely top date based on the average median top between the daily and weekly variances is the 13th of October 2025. That's the most likely, okay? Based on the data, the earliest likely top at a one standard deviation variance, 68% probability of 6th of October 2025. The latest likely top will be the 25th of October 2025. The most likely date where the 4-year cycle could be reasonably assumed to be broken would be past the 29th of October 2025. And if we take a look at the probabilities of the cycle breaking, we have, of course, 62 minus 100, so we've got around a 38% probability of the cycle having been broken at the 20th. That is decreasing up into 0 or 100 if you look at inverse into the 29th based on that data. If we move down over here to the probability of a top happening after the cycle breaks, if we account for things like structural shifts, macro liquidity, if we take a look at different catalysts, for example, interest rate reductions occurring, there's about a 30% chance we have a top after the 29th. So to summarize everything, guys, that is what I want you to look at. That is the answer. That is the statistics. That is the probabilities. That is what we are watching. For us to be confident the 4-year cycle is broken, we need to see a top for Bitcoin happen after the date suggested in here. The most likely range for a 4-year cycle top could theoretically be anywhere between, again, like we mentioned, the 6th of October all the way up to the 25th of October, with the probabilities of any one of those particular days being the top diminishing past the 13th. So pay attention to that, guys. Let's jump into Bitcoin. We took very long to get through that because there's a lot of data, so we're going to flash speed run the rest of this analysis. As we mentioned already, the key trigger point, 120,000, we have broken above. We saw over here numerous instances breaking above 120,000 resulted in some flash volatility toward the upside. We have seen that, but we still do have a local top here. This is still a resistance which we need to break to confirm a new all-time high, of course. So looking at the current price action from an hourly perspective, we can see we have been sitting above the 50 EMA basically ever since we broke above the 50 EMA back at 110,000. This is an indication of volatility and strength of the trend. If we see a breakdown of the 50 EMA, we'll be looking at potential reversals and corrections into sell-side liquidity. Provided we remain above the 50 EMA, we could very likely see a continued push into a new all-time high, as it does appear like momentum is being absorbed in this uptrend. If we are taking a look at the immediate short term, such as a 30-minute chart, we can see some key trigger points here. In fact, I want to take a look at the 15-minute chart. We can see some key trigger points here represented by our buy side and sell side liquidity levels. Marking these out as trigger points, we can see we are developing somewhat of a horizontal range between our buy side liquidity and our sell side liquidity. Sideways consolidation and absorption will take place within this range. Breaking the range upwards, this is going to confirm a very likely all-time high, if not an attempt to come and retest these highs. Will we create an all-time high on that push? I don't know, but it is very likely we will be at least attempting to come up into this range on the VRPV. If we lose this low, 121,400, it is likely we break down from this horizontal consolidation. The breakdown expected move would be the measured move, taking us back to 120,000 as a support. Pay attention to that, guys. That is the short term. That is what we're watching for Bitcoin. Of course, while we remain above 120,000, we are pretty much in a very good position for retests of new all-time highs. This is a major support. Only losing this level of support would increase the probability of corrections back into 117, 118. Of course, if we start to see that happen, we diminish the amount of time we have until we can confirm a 4-year cycle top. Remember, like we said already, if the top happens after the 29th, it is likely the 4-year cycle is broken. That brings us to over here. The most likely top for Bitcoin is going to be the 13th, which is over here. And of course, if we look at where tops of the earliest could occur, we have the 6th and the 20th of October. So all of these dates, the 6th, the 13th, the 20th, and 29th represent different things, but they are all of dates of significance. And if we start to see these corrections occur earlier, it decreases the potential for tops to occur within this range of course, the 13th being the most likely based on this data. And we remember we have a 30% probability of all of this breaking and just creating a top later on, based on the context and economic climate which has been developing. That is something we need to pay attention to as well. So I'll come back to my initial statement. The market is not deterministic, it is probabilistic. You have to view it on a level by level basis. We don't know when the top is going to be. We can only look at the data and make assumptions, but those assumptions aren't applicable. They aren't actionable information. We have to look at what is happening. What is happening right now? If we break up, we know the market goes up, and then we watch to see how that momentum is developing. Is it being absorbed? Are we creating new highs? Are we creating higher lows? Are we following through with that strength? If we break down, how would that breakdown look? We assess it as it develops. Is it showing weakness or is it showing absorption? Are we seeing the price action break below key levels of liquidity? If so, could the price continue lower? These are the questions you need to ask yourself in real time. Not just, oh, 4-year cycle says this, therefore up. If you're reducing your entire analysis to something so simple, you run the risk of a lot of variance and you run the risk of a lot of errors in your analysis and your decision-making process. That is something you have to pay attention to. So That is it for the daily. Really quickly to the weekly. The weekly candle close is happening in 24 hours. We've said already, the weekly candle close above the 62.09, exceptionally bullish. We'll discuss that tomorrow in the weekly close. The weekly close above here, exceptionally bullish. We'll discuss it tomorrow in the weekly candle close. Both of these suggest we could see an extended continuation well into mid to late October for a potential next top. Of course, that would line up with the expected tops, or at least the standard deviation probability is suggested from the blended daily to weekly 1064 day bar theory. So pay attention to that, guys. Thank you for tuning in. A little bit more of a macro video. I don't really like doing macro videos too much. Again, as you know, I'm a day trader, I'm a scalp trader, so I don't spend too much time on these higher time frames personally. I just spend time on the 5 and 1 minute chart. But I think a lot of people are asking these questions, and I think I want to put my 2 cents in from a statistical and data-driven perspective. I think a lot of people talk about what they think is going to happen. This isn't what I think is going to happen. This is none of my personal opinions. This is just a pure, raw TA. This is just the data. This is just what the charts have suggested. This is just the data, that the statistics being extracted from the numbers we have seen and how the price action reacted, and it's just span out these dates, span out these probabilities, and that is what we're looking at. So thank you for tuning in. I'll catch you guys in tomorrow's video. Have a fantastic rest of your weekend. See you then. Bye.